Welcome back. Pidilite is under pressure in the back of a weak set of Q3 numbers. There's sales weakness, there's a high cost inventory hit, but the management remains optimistic. Manglam is here with the key takeaways. Manglam?
Well, as far as Pidilite numbers are concerned, they were weak, no two ways about it. As compared to our estimates and the street numbers year on year as well, they were, rather weak. 5% jump in the revenue year on year, but as compared to street estimates, they were lower by almost 4% as well. The EBITDA came in shy of 500 crores. We were working with a number upwards of 580 odd crores. As a result of which, the margins and the net profits, both of them were below expectations. The consumer business volumes grew just 1% as against street expectations of 3 to 4%. And the gross margins, while they improved a little sequentially, the management said that, they were still sitting on high cost inventory, as a result of which there wasn't full improvement. But thereafter, we had a conversation with them, and this is what Bharat Puri told CNBC-TV18, that while primary sales were weak because of high inventory in the base, secondary sales, which is what consumers buy off stores, was actually as per expectations. And from this quarter itself, they are likely to see improvement in the numbers. And for the fourth quarter, they do target high single-digit to perhaps double-digit volume growth, and they are yet to see some recovery in rural and semi-urban markets. But, the key raw material that they have, vinyl acetate monomer, VAM, those prices have settled at around $1,200 as well. Back in the peak, they were close to around $2,500. So all this bodes well for their business in the near future and the medium term. However, today it's weak on account of weak third quarter numbers.
Okay, all right. Thanks a lot for that, Mangalam. Well, Prakash, what do you say about this one? Normally a very, very good quality stock, valuation-wise, it's always traded expensive. But as Mangalam mentioned, a disappointment in a couple of aspects, volumes as well as margins. What would you do with the stock?
So I think, Nigel, the answer is in your question. These are wonderful businesses that you would not get very cheap in normal times. It's only when there is some sort of a stress, there is some sort of a question mark in terms of the growth trajectory, which has always accorded premium valuations, is when you would get these stocks at these prices. So I would believe the softness in the stock price is probably not something which is going to be worrying long-term investors, because the brand salience, the distribution strength, the product strength, all of that remains unchanged. It's just a matter of some more quarters where raw material prices start getting slightly benign. Demand picks up, construction activity would probably start doing that, and all of this tells you that these are stocks that you buy into the portfolio when there is some disappointment, and that this is one of those days. So if you're patient enough to buy and hold for the long term, I don't see any reasons. The PE multiples have always been trading at a premium. It's not that this is the first time you've seen that, and they could go back to premium multiples at some point. But if you're okay with the multiples that prevail now, definitely you could buy.
Prakash, thoughts on Zomato? There is a sharp fall today, down 8%. The company is now transitioning away from Pro Plus to Zomato Gold, and right now at least the initial pricing for the first 3 months is going to be very aggressive compared to competitors like Swiggy, and the analyst read is that this is going to impact the profitability, at least in the near term.
Yes.
Your thoughts on this move from Zomato Gold? They constantly change their pricing and their subscription model for their premium customers, but what have you made of it?
So Rima, when you are the market leader and you actually create the market, you will have to go through this evolution, which is very iterative. They've not been able to get quite a few of those things right, and any attempt at monetizing their properties, their services at the unit economics level is something which they desperately need, right? So that's something which the street has been watching with bated breath. And if that's not coming, or in fact, if they're going to be putting good money behind, some not so good money in terms of this thing, where they keep on bleeding again, it's going to be definitely very negative. So all that confidence that's been coming through or has just started coming through will start getting shaken off. So nobody wants to see a situation where next quarterly call you are staring at a big loss again, and there's no explanation on how long this loss is. So all of those timelines are a bit of an issue, and some of the leadership problems that they have been facing, a lot of the exits that they've announced, those also kind of haven't been filled back, or you've not seen any kind of a restoration of that confidence as yet. So yeah, some long way to go. So I would of course be willing to buy at all, but I would wait for it to stabilize, especially on the operation side rather than the stock price, to look at something from a longer term perspective. But at this point in time, definitely it's an avoid.
Got that, Prakash. Thank you very much for that. You were talking about Indus and its trajectory, Prashant. I started looking at Zomato just to remember the exact high. Talking 154 thereabouts, and right now we're in the 40s, somewhere mid 40s. So a lot has happened. Let's see the road ahead for these stocks. By the way, speaking of stocks, quick point on Cipla. It's still down about 3.5%. The US sales number, revenue number flash. US revenues are actually in line with estimates. They're not that bad. About 195 million, if I remember the number correctly. And the range was about 190 to maybe 213, 214. So US sales are okay. Perhaps something else that has kind of led to that dent. Some attempt at a recovery or at least stability on the Cipla stock as of now. But okay, it is that time when we reveal the winner of the contest. You came, you saw, and you answered. So thank you, viewers, for participating in the CNBC-TV18 budget quiz. The question that we asked you was, when did Nirmala Sitharaman present her first budget? The correct answer is C, the 5th of July, 2019. And here is today's winner. Congratulations to Anil Raja Pedireddy. Remember, keep watching CNBC TV18 and win prizes daily on the CNBC TV18 budget quiz.
Okay, I think that was also the year when Mr. Jaitley presented his last budget, right? Because, I mean, there was two budgets. One was before the elections, the interim budget, and then there was the full budget, which had happened. Okay, our alpha manager of the day is Ajay Vora, and have listed equity alternatives at Nuvama Asset Management. Ajay, great to have you with